The last interview during MINEX Forum 2011 is with Coignard, Managing Director of HCF International Advisers. Good evening, Christine.
Good evening, Natalia.
Okay, Christine, what are the main challenges of raising mining finance anywhere?
Well, the first challenge is linked to the situation in the financial markets. It's easier to raise financing when they are good. However, it's possible to raise financing also for the good projects in the worst possible market conditions. We've done that. We raised $710 million in the middle of 2009 for a Mauritanian iron ore producer. So that's the first challenge. Second challenge is to, it's preferable to have producing assets and ongoing cash flow and a strong balance sheet that helps prove the capacity of the management to run this business, but also provides recourse to lenders if the mining company were to look for debt financing. Very important is to have a good asset. You don't go very far with an asset that does not compare well with its competing assets in terms of geology, in terms of cash cost. The asset has to be within the first or second quartile of the cash cost curve. I hear a lot of very enthusiastic forecast for metal prices, but just to bring things in perspective, project finance lenders today go to credit still with the gold prices of $850, $900 an ounce, and copper prices of $220 a pound. So they are taking significant discounts to the price, which means only the best assets will get credit approval. Key challenge is to have the right management in place, and the expectations on the management are next to impossible, but are there. The management has to understand the industry, understand who the players are, be able to position themselves, understand mining operations, but also understand the financing markets. And a CEO of a mining company would tend to spend 40-50% of his time with investors, bankers, analysts. So it's a very broad range of skills, and of course management would need to have to show its capacity to develop an asset and bring it to production on time, within budget and within specifications.
Christine, and what types of financing are available for companies who are operating in Russia, and who provides financing?
Well, actually, there has been a broad range of types of mining finance that has been used by Russian players on the equity side, on the debt side. Most mining companies still rely on cash flow generated by existing assets or generated by other companies in a diversified group of portfolio. These kind of companies rely on corporate loans, pre-export financing. Other companies have used a range of types of financing, private placements, of course, in Russia, outside of Russia, IPOs, royalties, earnings, warrants, strategic partnerships, and also project financing. There have been some very successful transactions, one by Bima and now owned by Coignard, and for the Kupol deposits, and more recently with Petropavlovsk on the basis of Chinese contracts. So there's a broad range of financing, and the sources are in Russia, outside of Russia. There are still few players, but I trust this will change, especially in Russia. I'm quite optimistic about the perspective of Russian investors having more Russian investors getting into the mining sector.
And what are the challenges of raising finance for large metals and mining firms in Russia?
Well, they have benefited over the past few years of a rather unusual environment whereby they had managed to keep their production costs within manageable levels, and whereby the price of commodities have increased. So they have been generating tremendous margin, and in that environment it's been easier for them to raise especially pre-export financing, and they are actually currently looking at raising ECA financing on a longer term basis and US dollar based financing and rather cheap rates. The problem with this approach is that they are taking great financial risks because of the mismatch between the loan duration, they basically take until 5 years maturity, and the cash flow profile of the asset that they are actually financing, which would usually take about 3 years to build an asset, then 2 years for a ramp up. That means that they have to repay their credit from existing production, and there is only so much cash available, even if there is a lot of cash generated currently. And in case and that happens all the time, everywhere in the world, the asset is not developed on time, within schedule, within the budget, and within the specification, then they have run risk of being at loss and having to draw on other resources to repay their loans. It's especially not appropriate for world-class assets, and there are a few of those in Russia. Billions of dollars of development costs, where the risks are just too high for one company to take. And also for assets located offshore in challenging jurisdiction like Liberia, Guinea, Mongolia. There again, they would have great interest in sharing the risks with other parties, and especially parties that can cover political risk. So the main challenge for them, I think, is to be able to maintain the growth that they have in plan, is to be able to raise project financing in the international market. That's going to challenge their ways of running project management. They're going to have to comply with both Russian and international documentation requirement to, on the one side, bankable feasibility study. They're going to have to allocate huge resources to be able to meet all of the challenges of developing such assets. And an EPCM contract is good, but it's not enough. They're going to have to adjust their management decision-making process to be able to meet complex decision-makings on the way.
And if we're talking about junior companies and intermediate companies, what are the challenges of raising finance for them?
It's very different indeed from the major companies. I think the key challenge for them is going to be to expand their investors base and to adjust to the changes that are taking place in the market. I'm actually quite optimistic of a Russian investors base developing for the mining sector, for the good reason that so far they had higher IRRs in other industries and shorter payback periods, but these opportunities are fewer and far between. They are making low returns on the bonds. They don't want to go into the equity markets on the one hand. On the other hand, Russian mining companies have generated such cash in the recent years that it's finally came to their attention. It's also an industry that is becoming strategically important, not only for the buyers of the commodities, but also for the country. So that's raising a little bit the profile, and some people are considering now how they can capitalize on all of this attention put in the industry. So there are new sources of financing that are being established also in Asia, for example, the Hong Kong Stock Exchange. There are a lot of things to see with the Chinese and also with off-takers of the commodities. So one thing is to expand their investors base and really be quick on their feet to capitalize on this new range coming in. Another thing is to be a little bit more creative in their ways of raising financing, because they have been very focused on IPOs, which remains a very desirable thing to do to increase the investors base. But there are many other types of financing, like royalties, like setting up a strategic partner and setting up a warrants program and raise equity on an ongoing basis. Earnings structure also, whereby you set up a partnership we basically delegate the drilling, and if the company meets certain targets, then they have the right to purchase additional equity. So all of this needs to be, I think, better looked at. On the debt side, actually, intermediate companies have been very successful at raising project financings in Russia. I've talked earlier about Bima, Kinross, the Kupol deposit, Petropavlovsk. I think it's an ideal kind of financing for them because it relies on the future cash flow of the mine being developed. It requires limited equity. Although it does require ongoing access to the equity markets, and it's also a very good way to share the risks and to also enjoy extensive reporting of what's happening on the ground. So the key challenge for the intermediates is going to also be expanding their investors base, but also capitalizing on all the opportunities in the project finance sector.
Thank you. And also a question about your company. What projects are you working on currently, and what are your plans for future?
We're spending a lot of time as project finance advisors to Ivanhoe Mines, who is developing the gold copper deposit in Mongolia called Oyu Tolgoi. We are aiming to raise $4 billion in the market. It's the largest project finance transactions so far. Our plans were very opportunistic. We try to move where the markets are. We see good opportunities in Russia, some project financing on the world-class assets we're talking about, project financing also at the intermediate company level.
Okay, thank you very much. And the last question. How do you like MINEX 2011? I
like it as much as I've liked MINEX since I started attending MINEX. I think it was 2005, 2006. It's like a meeting with a big family. It's extremely efficient because within 2 days I catch up with a lot of my former colleagues from the rails, but also from other companies I've worked with. It's excellent source of information, exchange of information, also business development venue.
Thank you very much, Christine.
You're welcome.